If you're looking to build a portfolio that provides steady income, stick around because today we're going to explore the best sectors for dividend stocks. In case you stumbled upon this video, dividends are payments made by companies to their investors, usually from their profits. When you own a dividend-paying stock, you get a portion of the company's earnings, and this is great because you earn money even if the stock price doesn't go up. Dividend stocks are popular with investors who prefer a safer, less risky approach and like the idea of getting regular cash payments from their investments. The sectors we will talk about are perfect for those who want steady passive income and those who want to grow and preserve their wealth over time by reinvesting their dividends. But remember, not all companies in these sectors are problem-free. They can still face issues like drops in value or poor results. But what makes these sectors reliable overall is that they are generally stable, less affected by economic ups and downs, have a good track record of growth, and strong market demand. First up is the utility sector. This sector includes companies that provide essential services such as electricity, water, and natural gas. These are basic necessities that people and businesses need every day, regardless of the economy. And because of this constant demand, utility companies have a steady stream of income which they can use to pay dividends to their investors. Also, utility companies are usually heavily regulated by government agencies. And while this can limit their growth, it also means that they operate in a stable environment where prices and revenues are more predictable. Not to mention that many utility companies have been around for decades. For example, top companies like Consolidated Edison, Black Hills Corporation, California Water Service, and American States Water have been paying dividends every single year for the past 50, 54, 57, and 69 years. However, just to clarify, not all utility companies pay dividends. Why do some companies choose not to? Because they might prefer to reinvest their profits back into the business, regardless of the sector they're in. This could be tech companies, healthcare companies, regardless of the sector. That's especially true for companies in growth phases, where they might need to fund new projects, expand their operations, or invest in research and development. Reinvesting profits can help a company grow faster, which might eventually lead to higher stock prices and greater long-term return for investors. Now, companies that pay dividends are often signaling that they have stable and predictable earnings. They're usually well past that growing phase. They have been in the market for decades and want to reward shareholders by sharing a portion of the profits with them. Of course, this is not always a rule. Be cautious because some companies might try to trick you into believing that they are stable. So you always have to do some research to ensure that they are genuinely financially healthy. The next sector to invest for dividends is the consumer staples sector, also known as consumer defensive. This sector includes companies that produce and sell essential products like food, beverages, household items, personal care products, and even tobacco. Once again, these are products that are always in demand. Consumer staples are considered non-cyclical because their demand doesn't fluctuate significantly even when the economy is contracting and consumers are earning less. There are thousands of companies that fall into this category, but what makes the big ones stand out is their competitive advantage called brand loyalty. Brand loyalty helps maintain steady sales, which translates into stable earnings and consistent dividend payments. For example, take Coca-Cola. People all over the world recognize Coca-Cola and often prefer their product over others. I dare to say that it's one of the most recognizable brands worldwide. Its logo, taste, and marketing campaigns have created a strong brand image, and I bet that you might even find a stand selling their products in the middle of the desert. Not to mention that they have a wide product range, so there is something for everyone, even for the non-soda consumers like me. Just discovered the other day that my favorite sparkling water is owned by them. And guess what? Coca-Cola has been paying and increasing its dividends for the past 62 consecutive years. It's a very consolidated company. Examples of other large companies that have been paying dividends for more than 50 years include Walmart, Target, Colgate, Procter & Gamble, Philip Morris, Lowe's, Universal Corporation, and the list goes on and on. Now, when building your dividend investment portfolio, you can either choose to select individual companies one by one or invest in specific ETFs designed for income generation, which already include the companies that I'm mentioning in their portfolios. Some examples of ETFs, and I will leave them listed here on the screen, are iShares US Preferred Stock, iShares Dow Jones Select Dividends, and Vanguard Dividend Appreciation. If you're curious about discovering which companies are part of an ETF, I will show you because it's quite simple. You just go to Yahoo Finance website and enter the stock symbol, which is a unique series of letters assigned to that stock to make it easier to find. Then scroll to the stock's holdings and you can see the top holdings of the ETF and also the sectors those companies belong to. Finally, let's explore our third sector, real estate investment trust or REITs. REITs are companies that invest in the real estate market. They were established in the 1960s to make it easier for small investors who don't have large amounts of money to invest in real estate. For example, let's look at an iconic landmark that everyone is familiar with, the Empire State Building. The Empire State is owned by a REIT that manages and makes money through several revenue streams. This includes renting office spaces to businesses, renting retail spaces on the ground floors, and selling tickets to tourists for access to their observation decks. The profits of these multiple revenue streams are then distributed among its shareholders as dividends. To give you an idea, one share of the ESRT, which is the stock symbol for the Empire State REIT, costs around $10 at the time of this filming, making it very accessible for individual investors. One reason REITs are such a popular choice for income-seeking investors is that they are required by law to distribute at least 90% of their taxable income to shareholders. And it's not only offices that real estate companies invest in. There is a wide range of property types, including residential properties, industrial properties like warehouses and distribution centers. There are data centers. There are healthcare properties such as hospitals, nursing facilities, and senior living communities. There is hospitality properties like hotels and resorts. And did you even know that there are some REITs that generate income from timberland properties by selling timber and other forest products? The list is really extensive. And if you would like to diversify, you could pick a national ETF like the Vanguard's REIT Index or explore properties outside of the United States by investing in an international REITs, such as the Vanguard's Global Real Estate Fund that excludes the United States. These were the top 3 sectors for those interested in investing and receiving dividends. So let's quickly recap. The utility sector provides stable and predictable income due to constant demand for essential services. The consumer sector will offer reliability through consistent demand for everyday products. And REITs diversifies your portfolio with various property types offering a higher dividend yield. Remember, it's crucial to conduct your own research and understand why you're investing in these sectors. Dividend stocks are an excellent strategy for building passive income and preserving wealth. But if you are still in the workforce and plan to continue for many years to come, consider reinvesting your dividends to take full advantage of compound interest. Many people dream of living off their investments, but do you know how much you need to make that dream possible? Quite a lot. So start now and stay consistent. If you found this video helpful, please like and subscribe. Thanks for watching and see you in the next one. Bye.